Welcome back, guys. 3%. I know what you're thinking. What is this, an investing channel? I know, I was pretty disappointed about it myself. I really only had like 2 good plays this week, FedEx and Adobe, and although I did get good wins on those, I kind of went off script and tried to play the anticipatory run up on Nike, and of course get burned, because that's always what happens when you go off script. So yeah, sorry I didn't get back to you last week with more plays. The truth was there wasn't a lot of good plays to be made, and I had some family stuff going on, so I just dealt with that. But this week, the earnings lineup looks much more exciting, in addition to the fact that we might have some biopharma catalysts coming up. So let's get into last week's plays. I'll give you my thoughts about what I did right, what I could have done better, and hopefully you can learn from my mistakes. So the first play this week was an earnings play on Adobe, a put credit spread, which I actually have a full earnings DD on already uploaded. There really isn't too much to say about this one. If you were smart, you got in, and then the very next day it gapped up 4%, and then you closed out for about 80% profit. If you're a little less experienced, you might have held on and got caught in that market-wide sell-off on Friday and saw Adobe capitulate about 7%, hanging pretty much just above our strike price. The ideal way to play this spot in the future is probably just to close the short leg immediately and hold on to the long leg. Just because at that point, the long leg was almost worthless, and we really don't lose anything by holding onto it and just hoping for a crazy 1 or 2 standard deviation move. Handling the position this way exposes us to a lot less risk on our short leg and allows us to capitalize on more profit on our long leg. We also don't have to sweaty hands the position when we get these huge market swings like we saw. My next play was on FedEx, which I originally did for earnings, but it crushed earnings so much the bullish movement continued long after. So I figured, why leave money on the table, and opened another PCS as a swing/momentum play. I have no complaints about how I played this one. I saw value and price strength, I got in and I got out that same day for 50% of the max profit on that position. The last and by far stupidest play I've ever made on this account was a PCS on Nike. Nike was on a tear, running up over 8% prior to earnings, and I thought to myself, I want a piece of that. I opened up a PCS with a spot price of around 119, and almost like the market was waiting for me, it absolutely dove immediately after I opened it. So yeah, I had to close that out for a $1,200 loss almost immediately. And normally this is the part where I'd go over what I could do better, but there was so much wrong with this play, from the entry to the reasons why I took it and to the exit, that I don't even know what to say. This was a terrible play. Yeah, we all do one every now and then. Don't feel bad. AutoZone, Nike, Aurora, Rite Aid, Costco. This week is gonna be hype. Hopefully I can get plays in for all of those. There's no guarantees. There's so many earnings this week. I'm going to try to do at least 3. Now, my plays are all time sensitive, so if you don't get them pretty much the second they come out, they're going to be useless. So make sure to subscribe. And if you're looking for a good broker, a source of stock market news, or options flow, I have referral links for all of those down below. Make sure to check that out. Thanks for watching, guys. Let's make some money.